That's the conversation with regard to the macro of the market, but let's dive straight in. The most recent IPO, Meesho, Vidit Aatrey, CMD and CEO, and Dhiresh Bansal, CFO of Meesho, joining us live this morning. Welcome, gentlemen. Firstly, congratulations on that very, very strong anchor book that you all have garnered. Talk to us about how you're seeing the interest play out, and what are anchor investors really quizzing you all on. What's the possible biggest concern that some of these investors might have? Give us a sense, give us a pulse, because IPO opens, your investors or your future investors want to know that.
Yeah, so first of all, thank you so much for having us on the show. I think our anchor list came out yesterday, and you will see very, very strong names in India as well as outside of India. We have a very good representation of investors outside of India as well, about 60 anchor investors, very high quality names. A lot of these people have seen like exposure to large value commerce companies in other emerging markets like China, Southeast Asia, South America, and they really believe in the story. I think the thing that has resonated with all our anchor investors, I think primarily is that we are still a very fast growing e-commerce company with market leadership today in customers and volumes. If you look at the first half of this year, our orders grew by about 53%, NMV by about 44%, and this is on large basis, right? Like our annual transacting user base is about 23 crores, 230 crore orders annually. So people are very, very bullish and optimistic about the growth prospects of the company. And they also like the capital light and asset light nature of the business. For the last 2 financial years, we have been free cash flow positive, generated about 1,000 crores in free cash flow. So they know that we can keep compounding this at a very good rate while generating cash. So it's a very differentiated story. And that's why we have seen very, very good reception from investors, not just in India, but outside of India as well.
Right. Dhiresh, hi, congratulations. I guess, Dhiresh, soon you're going to be a listed entity and it's going to be all about numbers, right? So your revenue per order, that's been falling over the years. What levers do you have to improve monetization without sort of hurting seller or consumer experience?
Yeah, so the way we kind of think about our revenue, it's in two streams. There is what we charge for order fulfillment related to our logistics, where we kind of make money on a per order basis. There is also advertisements, wherein sellers pay in the form of ads on the platform to get their listings promoted in the overall feed on how they are kind of appearing. So these two streams are kind of separate in nature. On the logistics side, the principle with which we have been operating is we make a certain margin there, and we have been kind of improving our cost efficiencies quite significantly. If you look at between FY23 and FY25, our cost of logistics came down by about 20%. And some of this we kind of passed into our bottom line in the form of increasing contribution margin. Some of it we kind of passed back to our sellers and consumers in the form of lower pricing for logistics. And that has led to significant expansion, both in terms of the frequency of our users, as well as new users getting attracted to the platform and joining the platform. So that's been the growth formula on the logistics side. I think going forward as well, we will keep focusing on these two revenue streams, apart from unlocking some of the new ones that we have on the anvil. And ad revenue, especially if you look at it here, today, roughly 1/3 in terms of ad revenues as a percentage of NMV when you compare with global benchmarks. And typically this growth is non-linear in nature. As your platform grows, you have more sellers doing ads. The ad revenues also grow faster than the NMV percentage growth itself. So those will be the two levers with which we will grow our monetization going forward as well.
Right. Vidit, come in here, because despite strong growth in users and orders, losses still continue for you. What is the roadmap to profitability, and by when is it that you expect to break even on EBITDA?
So again, we can't share forecast here at this particular stage. But if you see, at the end of the day, what matters for a company is free cash flow, because any company is valued at the net present value of all its future cash flows in a company. And that's actually the metric that as a company we optimize. All of our internal capital allocation, all investments are optimized for long-term free cash flow, because we believe that's the right thing for all our shareholders. And for the last 2 years, as I was mentioning earlier, we have been positive on free cash flow. Last year, this number was about 1,000 crores. And even in the future, this is the core metric in the bottom line side that we will keep optimizing for. Of course, as the business keeps expanding, there is more operating leverage. Some of the revenue streams that Dhiresh talked about, they keep growing in a non-linear fashion. Like all other bottom line accounting metrics will also improve. But I just want to emphasize that the thing that we believe is most important, and which is why we have designed a business model like that. As I said, there are actually no other e-commerce business model in India that is as asset light and capital light like us. So I think we have been very conscious about like investing money the right way and optimizing for the right long-term value for our shareholders.
So Vidit, okay, let me put this question differently. Therefore, logistics was one lever you've used over the last couple of years. But what are the other levers that are available to you to get to EBITDA break even, to get to profitability?
Yes, so today, like the two scaled up levers, as you said, are logistics and advertising. And as Dhiresh mentioned, just in these two levers, there's a lot of potential of growth, right? Like as we keep expanding, logistics is in a volume business, very high operating leverage. Once you have the highest volumes, your cost comes down quite a lot. At this point in time, instead of maximizing profitability, you will see for the last few years, we have been like passing back a lot of this value back to the customer so that the platform keeps growing at a fast pace, more consumers come on board. So I think that's what I mean. But if we have the lever to kind of keep expanding that margin if we want, advertising, same thing. The more competition you have among sellers, higher the chances that people will spend on advertising to gain visibility. Apart from this, by the way, we are also investing in some of the newer businesses that could become like large revenue streams in the future. Like we are investing in a financial services platform so that our sellers and consumers can get access to products that are otherwise not available to them. If you see some of the largest value commerce companies globally, they have built like financial services businesses that are quite large in those markets and contribute significantly to the bottom line of those businesses. So that's one optionality we have. The second optionality we have is as a content commerce business keeps growing, we have an opportunity to make some margin there. At this stage, the business is still too nascent, growing very fast. So we are investing more in growth, but that option is always there. So I would say like in terms of levers, we have enough levers, but I think it's a very conscious choice of like focusing on long-term value creation for everyone rather than optimizing for profitability in the short term, because we believe that's the right thing for everyone.
Sure. Dinesh, let me come to you. So therefore, is the plan going to be, or is it going to be sustainable to expect that you'll, with every passing quarter, the goal towards profitability gets closer? Is that something that one should pencil in? Or is it going to be an uneven ride? Are you going to focus in more on market share and take it from there? And at some point, you will shift your focus towards profitability. How does the strategy play out? Give us a sense of that.
Yeah, so I think if we look at the market today, we are seeing very good opportunities of spending more and be able to generate a very high user growth in our business, because the value proposition that we have is resonating quite well with the users across India. So that's the opportunity that we are taking right now. It is completely discretionary. We have those controls in our hand to kind of scale up or scale down marketing spends. As far as we see that, let's say customer acquisition cost remains low, the payback period of those customers is within a reasonable frame. We keep pressing the pedal on growth. We don't look at it in terms of market share, but more in terms of how quickly can we make the platform even larger, which accrues benefits to the rest of the ecosystem partners, the sellers, logistics partners, everyone. And that's the path that we'll continue to be on. I think as a result of this itself, the faster growth, like growth and profitability in this case, are not at trade-off to each other. Faster growth also leads to better distribution of fixed cost base over a larger base, and that also accrues to profitability. So I think we'll keep making progress on both fronts, growth as well as profitability, and shouldn't be seen as trade-offs to each other. And especially in case of free cash flow, which is our governing bottom line metric.
Perfect. Now allocating capital, right? You're going to allocate nearly 1,400 crore to acquisitions. What's going to be the focus area there of the acquisition? What does the acquisition do to add value to you? Give us a sense of that, Dinesh.
So we are, I think the number is slightly lower. I think it's closer to 1,000 crores or lesser. But the overall mix of what we will look at opportunities is very aligned to the mission statement that we have, which is how do we democratize internet commerce for everyone? Now, there could be opportunities to expand categories. There could be opportunities to enhance the logistics ecosystem for us. Many other forms of our opportunities. But the things that we get most excited about are those which kind of help us take e-commerce to every corner of the country, cover more and more ecosystem partners. And that will be the lens with which we will evaluate opportunities in the future as well.
All right, Dinesh, Vidit, thank you so much for joining us, giving us that perspective on Meesho, and wishing you all the very, very best, of course, and many congratulations on that anchor book once again.
Thank you so much.
Thank you.